is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Beatrice Potter. Believe there's a great power silently working for all things, silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We have the Dow Industrials down 129, NASDAQ off 30, S&P's off 9.5, gold contract off $2.80, trading at $1,182 an ounce. Silver down 5 pennies at $16.62 an ounce. Platinum up $20 at $1,141 an ounce. Copper flat at $2.77 a pound. Light sweet crude down 88 cents, trading at $47.30 a barrel. Bonds, so you have the 10-year up 11 ticks, 128.30. 30-year up 17 ticks at 164 flat. King dollar up 354 ticks at 98.63. That looks like it's actually rejecting a higher price at this particular point with lighter volume, by the way. It's going against the March 18th downdraft. Euro down 90 at 107.44, and the yen is off 14 at 119.93. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? If we go over to the world of the SPY, what are you going to have here? Let's take a look at this baby. So what we did out here yesterday is this. Yesterday, you go topside. We have lighter volume as we go topside. Today, what happens? We're going downtown. Bottom line, you get lighter volume on the way downtown. And the way this baby is set up at this particular point goes like this. So what we've done is you have window dressing happening. We have a short week. Friday's Good Friday. Market's closed. We're trading right now at 207.12. Right now, we've done 58 million shares, basically a sideways market. Yesterday, yesterday we did 96 on the way up. So the real key is going to be, okay, is it's just going to test the gap, the top of that gap. I don't see no huge expansion topside, but I don't see the downtown either. You know, what you have here, I suspect the market will make another run for this 208.61, which was the high of yesterday. It's a weak market. That's the bottom line, folks. What we do have is that this is just cleaning up with the good old window dressing from the last 2 days of the month and the following 2 days of the first of the month, particularly when we have coming into Easter, coming into a short week. You know, bottom line, I expect what you're going to see the real action happening next week. Now, that's on the SPY. The NASDAQ composite is a different animal. The NASDAQ composite can't get any traction whatsoever. Now, it's certainly light volume. We're only doing 15 million, so that can also bounce. But bottom line, that hasn't been able to even crawl up to the downdraft that was created out there on the 25th. That's when the NDX 100 went from 108 to 105.52. Inside the NDX 100 today, what is driving it higher is that you have Charter Communications is up $11.60. That's a takeout, I believe. Well, they're taking someone else out. Let me just see for a second. So, no, Charter's taking out Bright House. That's going to be interesting to see. Bright House, if you have Bright House is disgusting. Hopefully Charter is, we'll see whether it's any better. Anyway, compared to, if you can get FIOS, folks, that's the one thing to get. Second leader inside the NDX 100 is Express Scripts. That's up $1.93. You get Priceline up $21, and you get Micron Tech up 46. Now, taken away from it on the way down, you have Kraft is down 340, traded at 87. That's a takeover deal. Celgene is off 441. Lam Research is down 216, and you get Alexa Pharmaceutical off 420. The IBB, folks, if we do take a look at this IBB, what you have inside the IBB is this. The IBB came off the high. This is the NASDAQ Biotech Index, okay? And this index in itself, when this thing goes south, it takes the NASDAQ composite south really quick. Because this, you talk about, it's been on a tear for 3 years on top side, but each and every one of those corrections, it goes down 75 points in a heartbeat. Last time, 4 days, the thing went down 45 points. We went from 74 down to 33. So 50, yeah, it went down 45 points. Now, what you've done is this. Yesterday, you know, we got up to a price point of 353. You're backing down today with 1.4 million. So that's saying that the biotech index is not done also, and it's going to make another run for 358, which is, yes, a total mind blower, but that's what it looks like it wants to do. Gold contract. What do we have with gold? Now, this is going to be a real toss-up. So watch what's going on here. The gold contract itself, I really like what the gold contract is doing, okay? The contract itself is acting exactly like it should, meaning you've gone up in volume, you've pulled back with lighter volume. So the real question is this a small ABC structure on the way up? That, the B point being 1220, which was generated out there on the 26th. What we have out here today is that you pull back with lighter volume, all of the above. That's the great thing that I like about what's happening with the metals market, okay? Now let's go over to silver for a second, because I want to show you that there's not a difference between gold and silver, but there is a difference inside the equities. And so first we'll do the actual metal. So the way silver's acting, silver's pulling back today, 34,000 contracts, that's fine. 34,000, and silver's stronger than gold. 34,000 is going into 60,000. So that setup is cool, okay? Bottom line, this also could be a nice ABC structure on the way up. That being said, if we go over to the XAU and the HUI, what you're going to see is that they're backing down. They are backing down with lighter volume, but they're having a hard time holding price. So the XAU right now is at 65.30. The XAU, the bottom where it broke topside, is 63.76. So more than likely that's going to get hit. Why? Because you've got into the 67, 66 area. And you're pretty deep into it. So it looks like price-wise, guess what? It wants to back into it. Volume-wise, yes, it's been dramatically lighter volume. But what does happen is that this market has to hold price. We go over to the HUI, the Gold Bugs Index. We look at the Gold Bugs Index. Same type of setup in the Gold Bugs Index. What we've done is this, is that we're at 159.29. The bottom there is 156.73. And when we talk about how we've come down, you know, yesterday we did 15 million shares. You're going into 21 million. That setup's all right, but the bottom line, that we have absolutely, we need rejection of lower price. We have the lighter volume. Now, let's switch gears. I'm going to go right over to the dollar index. Why? Because the dollar index looks to me that we have got what we need if you are a bull inside the metals complex. And this is what it is. We've done 44,000 contracts today. That, we've made it to a price point of 99.005. You've done 41,000 contracts, 44,000. It can't handle the 20th, the 19th, nor the 18th. And the way we're trading right now, what has happened is that we got into the bulk of the trading on the 18th. We made it to a price point out here today, as I said, of the 99.05. And right now, you're under the 94, no, the 90, there she is, under the 90, 98.78, and that's what you're looking for, because that was the. If it can stay under that 98.78, that would be a test of your downdraft, your large downdraft. You have lighter volume. Now the real key is this a small ABC structure on the way down? And particularly because what we are going to have happen is the gold market, the metals market is not going to be closed in the rest of the world, but what we are going to have is that the metals, our markets, basically will be dull. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials are down 152. Oh, they're hitting the S&P. NASDAQ is down 37. S&Ps are down 12.5. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. You get the Dow off 166. Nasdaq's down 38. S&Ps are off 13. And let's bring this, first we'll bring the E-minis up. And what you're going to see out here, folks, is that the E-minis, put this on an intraday chart for a second. What you're going to see is that the little baby, yes, she came into a small swing point from yesterday, breaking that swing with some real juice. Someone basically threw some juice at this in a big way. So we had a swing out here from 0650 this morning. That swing was at 2065, 2067. We just came into that, and the way we came into that, someone wants to basically force this thing into lower price. We did 58,000 contracts. You get the 58,000 contracts, so you bring this back a little, and what you're going to see is that the first leg down was just getting into the gap. What this just did is just fill that gap up. So this, you're at 62. This thing can get to 54 pretty quickly. If I bring this SPY back up, and I'll show you what we were doing when we first did this intraday, right at the beginning of the market, what you see. Actually, it has further to go. So right now, the top of the gap from is 205.95. And right now, you're at 206.69. The NDX 100, the Qs are almost filled it up. So this is going to be interesting watching this whole thing shake out. You can, this volatility is going to be in here in spades. So with the Qs are at 105.81. And that's right at it right now. The actual, let me pull this up 1 second. Is right at the very top of that. So 105.77 is the gap. So it'd be interesting to see when we hit that, because we haven't hit it thus far. Oh, we hit 76. You got to love it. Okay, so the top of the gap is 105.77. We hit 76. Now we'll see whether it's going to reject that price. We're going to have lighter volume, that's for sure. Now we'll see if it's going to reject that particular price, and from that point, will it try to make one last gasp for the high of yesterday? We go take a look at some of the sectors out here, and this is what you have. We take a look at the energy sector. That's getting smoked once again. You get ExxonMobil off 75. We get Chevron down 192. Schlumberger's off 99 cents. ConocoPhillips off $1.45. The financials, they're basically down, not huge. JP Morgan Chase is off 41. You get Goldman Sachs off 260. Visa's down 17. We take a look at the real estate sector, the REITs, the commercial REITs. They're down pretty good. You get SPG, Simons is down $1.81. You get PSA, which is a storage, down $2.32. If we do take a look at the IYR, now if we bring this up and you take a look at the IYR, the way this baby is set up right now, this is weak, and it looks like it's actually setting up an ABC structure on the way down, and that is basically, yeah, we're at 79, right, 79.20. It has a high volume swing low at 76. Your 8 point on this is 82.41, which is the high that was generated March 23rd. Yeah, this is an ABC structure. It looks like it's an ABC structure on the way down, and it's a beauty. Now, let's get into the bond market, because what we have with bonds is this, folks. The way the bond market is structured right now, it's going to be a real heads up. If it can make it over the TYM. I'm going to use the TLT. So you can see this correlation and see where we stand right now. And what you have is this. We're coming into the initial downdraft off the high, and that was February 6th. Now, it was vicious how we came down there. The 10-year went from 129 to 127. What we've done is that we're coming back up into that area right now. And when we initially came back up into that area on the 18th of March, it came up to that area with force. It backs down, and as it backed down, and this is where it really gets fuzzy. As we back down, we also back down with volume on the 26th. Now what we're doing is that we're building cause. Now the cool thing is, from this morning to now, what has happened is that we're building cause with volume expanding as we're coming into this 131, 132 area. So that is setting up that, guess what? We're going to get some juice into that swing point. If that's what we get, the bond market's not done. If we get up into that swing point, it gives it up on price, and we don't have the volume, guess what? That could be a very large change of trend inside the bond market. Let's go to Dave in Denver. Hey, Dave, what's going on?
Oh, not too much. I just, once in a while, I watch and play the UVXY, which follows the VIX, and it had huge fluctuation today, and I'm just kind of curious what went on. And it was closed to trading, so I don't know, but it jumped from about $15 clear to $19 today, about 5 different times.
Yeah, that was a bad tick. So what he's looking at, folks, okay, we were watching this in the den this morning. This is the ProShare Ultra VIX futures. It's a bad tick. That's all that is.
Oh, okay.
Yeah.
Thank you. Just checking.
No, I'm with you. Have a great one, man. Have a safe one. That happened at 11:10, folks. 11 to 10, it spiked all the way up to that $19.12. And then by 11:20, it was back down to that 14.44 area. And those are always dangerous, by the way, too. those bad ticks. The thing that's pretty wild is this. And I know plenty of you tigers and tigresses know this. When you have a bad tick, for some reason, I don't know how this works, but for some reason, the market seems to go where that bad tick was. So in this particular case, if that's the case, you better hold on, because a spike like that, you know, you can definitely have. I mean, that's what this likes to do. You get volatility inside the marketplace, you're going to have spikes like that. And the way this market is setting up right now, I do expect that you're going to have high volatility coming into Thursday. The reason being, you know, it's really going to be close inside the S&P. I don't see the volatility as much, but right now the volatility is picking up inside the S&P. But I do see it for sure inside the gold market, inside the oil market, and inside the dollar index. Because what we do have, those over a 3-day weekend can really turn into some juice. You know, certainly last weekend it didn't. And, you know, people were selling into the gold market. There's no doubt about that. You know, we'll see whether they're going to be selling into this gold market on this coming Thursday night. It's my take is that, well, right now, what you have is this. The metals itself, the metals look good. The equities don't look good. It's like, okay, so what way is going to fly here? And when I say the equities don't look good, what it is that they haven't got croaked on price yet. And the volume's light, but they need a rejection of lower price. And we need that pronto. This is Tom O'Brien. This is TFNN. You get Big Blue down 167. American Express is up 33. You get Boeing down 256. DuPont's off 109. 3M down $1.13. United Technologies up 148. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials down 182, Nasdaq's off 43, S&Ps are off 14. And check this out. This is going to be a trip, folks. So if you have Amazon Prime, okay, in a quest to connect people with products faster than ever, Amazon is testing a new service that lets customers instantly order household items like laundry detergent and baby food without touching a computer or smartphone. The new Amazon Dash button has an adhesive strip that can be mounted to the washing machine or kitchen cupboard or anywhere a customer is likely to notice a certain product is running low. The detergent deficient user pushes a button which uses home Wi-Fi networks to alert Amazon to deliver the item, saving the customer a trip to the store or even a trip to visit Amazon.com. That, you know, it's going to be crazy, man. I think the detergent one is going to work beyond belief, because for certain people, when I buy detergent, folks, I buy 5 or 6 of them so I don't have to go back. Man, that's pretty cool. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, folks, every trading day, 11 to 12 Eastern Standard Time, right here at TFNN, has a great program, also has a great newsletter. The opening call, the way you can test that newsletter, come over to our website at TFNN, go to the newsletters, trading newsletters, see the opening call right there, you can test drive it, absolutely free for 1 month. Basil Chapman, what's going on?
Hi, Tom. How are you?
You gonna get the Amazon button?
Isn't that incredible, huh?
You know what's so funny is that I just think it's a smart idea, and I've never got any stuff like that delivered to my house, okay? But on detergent, or like detergent, paper towels, stuff like that, when I go, I kind of like to get a bunch of them, and they stay in the garage, and it'll be nothing. I hit the button 3 or 4 times, good. I come home, and they're in
much easier.
Why not, right? I mean, Amazon's an amazing price, folks, okay? You can't beat it. I mean, I use Prime a lot. It's like, I don't care. We order bathtubs. We order everything. It blows my mind that they deliver it for nothing, $79. I don't know how they do it.
You know, when I thought about Bezos over the weekend, I'm saying to myself, he has been so smart about so many things, just very quietly. And, you know, he's never interviewed at all. And one of the reasons I think is because they used to make fun of his laugh.
Yeah.
So they had his laugh whenever they mentioned him and CNBC. And I think he just got upset about that. So he hardly ever gets interviewed. But in the background, he's produced an empire.
So check this out. This is insane, folks, okay? There's a couple high-end houses we just did, right? And I ordered bathtubs. Well, first out, the bathtub's like $2,400. We ended up paying $1,400. But this is the most bizarre part, folks. They delivered the bathtub. So that means that there's not labor to go to the store to get the bathtub. There's not labor to bring it in. It's like, there was no cost, you know, to deliver like a bathtub that's like 800 pounds. It's like, you're going to be kidding me, man. It's
That's
crazy.
fantastic.
It is. It's nuts. It's amazing. So what are we looking at today, Basil?
So we're looking at the Dow, and basically what we've been looking at for a little while is that I've been talking to you about the peak that was made back at 18,288 back on the 2nd of March. Now, the S&P never did that. Only the Dow went to an all-time high on that day. What's really interesting is that everything about the Dow that I've been discussing has met the requirements for a sell mode in the daily. And the weekly just started a sell signal the other day, but to really have the sell signal kick in to go to a sell mode for a deeper, more time extended length and price, I need to see the Dow break the low of 17,579 of the 26th of March. But for my subscribers to my opening call, we've been moving away from the long side and going more to the short side. And one of the reasons is, if you look at this chart here, it's just a very simple chart. I have got a channel, and I've got these 2 arch formations, and there was a competition here between the cup formation that you can see there.
Okay.
There, if people are looking, we're just looking at the high of 18,288 on the 2nd of March, down to the low of the 12th, back up to the high that was made at 18,205 on the 23rd, back down again. This is a very choppy market. So 2 things stand out to me very clearly. Number one is it was really important. If today was up 100 points from yesterday, I would have to say, gee, you know, there's a good chance that we actually might retest the high that was made back on the 2nd of March. But because of the action of today, look at the pattern. You see these very strong down candles, and then the candles that are going up, the long candles. This to me represents, no matter how I try to read it, especially when I put it together with the technicals, it looks like distribution. And if it is distribution, it means that big institutions are coming out of select stocks, pulling out very slowly, and now they've started to increase that selling going into the end of March. And they might be picking up new stocks, but usually they wait a little bit as they do that. So this represents to me lower highs, and now with that 17,579 of just on the 26th, that looks like lower lows. So I'm not positive on the market at all. But what's interesting is it's already also at this particular time a market of stocks, because some stocks are holding very well. We have a stock, we've spoken about this many times over the years. We're back in it again at $8.15, and that's Rite Aid. And Rite Aid this week went to a recovery high. Look at this monthly chart. It looks really, look at that beautiful bowl formation, breaks out, forms a kind of a cup and handle. So this is very, it's acting extremely well. Before we looked at it as when we bought it below $2, we looked at it as a turnaround stock. Now it's really a recognized stock, and I've got it as leg C in the weekly chart as a cup, and I call it a Chapman wave cup and ladle formation. By that I mean when it takes out the left side high, in this case of 8.62 back on the 6th of June of 2014, it went right through it this week, last week into this week. And that says that this leg should go to at least a D. So there might be a pullback, and that one of the reasons I say that is we've got the same pattern in miniature in the daily chart, and that says that this is leg D, and there could be a pullback to retest the lip of 8.48, somewhere in the 840s. So it's acting extremely well in all time frames, but it might be a little bit overboard. But this is some of the techniques that subscribers have been watching as we've used these specific identification markers to be able to use it as a position trade. Also, I had spoken to you about the IBB, which is the NASDAQ iShares. And what we were both looking at was that spectacular move that Friday, 2 Fridays ago, I believe, where it went to 374.97. I think that was BIB, Biogen IDEC, I think, came out with news and helped it, but it didn't close at the high. So that 374.97 represented what I call a peak A in the Chapman wave. That's the 5th highest peak, and has come down. And what I'd actually use this as an example. I had a caller someone had asked me to go through the patterns that I'm looking at. And what I said, there's a pattern that I talk about, which is I call the Eiffel Tower. You just go straight up and straight down. It looks like an uppercase A, letter A. And that's what we got back on the when that turnaround occurred on the 20th of March, went all the way down from the 374 level down to the 333.78, and then it rallied. So we have been short via the 200% short position, and we've had other positions in there, but we have a core position. And I'm anticipating that because of today's turnaround, there's a real good chance that this black line, the 9-period moving average of 349, is going to be very strong resistance. And the pattern I'd be looking at is a lowercase h. That's the back of the H there, and then you get the little arch. And that would say that if we take out the low of just 3 days ago, of 341.64, is a real good chance we're going to retest the recent lows. So that says to me that there's a good chance that in this rotational aspect of the market, part of the correction is going to be that some of the really the outstanding performers are going to actually lag in this particular phase, and I include the biotechs here. If you look at the transportation index, the IYT, not acting very well at all. So I think we're in a consolidation phase. In fact, I'd mentioned on my show about a week or so ago that the things that I look at are suggesting that we might be into maybe even the 3rd week or so of a little mini recession. Of course, we won't know that for a little while, because that economists look back at that and only announce it after the fact. But that's what the market looks like. It's in a consolidation phase. Some stocks are acting very well, but there are a lot of really good winners, especially on the NASDAQ, that are starting to act very poorly. So I'd be very careful here, very selectively long. If you're long, put in tight stops. But I think that some of these stocks are due for a breather, we can call it.
What, you just brought up that you think we might be in a small recession.
Yes.
What's the reasoning there?
Well, let me go through a couple of the stocks. There's a stock, CTAS. I've used this, I don't know, for decades. I've looked at it. This is Cintas Core. It's overalls, clothing, rentals. Did the same as, I think it's the same day. No, a day or two before, it spiked up on the Friday, CTAS, on the 19th, and then collapsed from 88.23 down to the 79 level. It's at 81. That tells.
Just stay with us for a second, all right? Basil?
Okay.
Okay, cool.
Thank you.
You stay right there, folks. Basil and I are coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Folks, we get the Dow down 177, Nasdaq's off 43, S&Ps are off 13. We're talking with our man, Mr. Basil Chapman, and we were talking about basically maybe a recession. You know, it's interesting, Basil, the reason I'm asking you this, right, is that, and I know you know a lot about this, is that what you have, folks, is this, is that the aspect of, you know, where we've been in 2008 versus where we are now. There was a great conversation this morning on CNBC, and it was with, folks, this guy, Kevin Walsh. Now, he was a Fed governor. I think he's one of the smartest guys I've listened to, and I've listened to him for a long time. And you know what he was bringing up, Basil? So he was saying to the, you know, the host there that, hey, listen, man, this is crazy. And I think Kernan, you know, he should be in Fox News. I mean, I don't know, he's been interviewing for Fox News for years, I guess, on CNBC. But anyway, so Kernan was saying, well, they should move something. And he brought up the aspect that no, you know, and one of the main reasons is that the only people that have got zero interest rates are the banks. And as it's coming down to the populace, you know, that everyone that you live with, I live with, and the normal people that running on the street, they haven't got a break. And he says, so what, the Fed's going to pull the gravy train now? And, of course, now I'm going right back to 1937, because that's what happened, folks, okay? What happened in 37, you know, and I don't see a market crash, but that's what happened, okay? So that's intriguing. Do you know what I'm saying? Oh, is Basil gone?
A top
and
a pullback, and then a rally again, and then a much sharper decline.
Yeah.
But yes, he is one of the smart. I was unfortunately unable to listen to. I just did just a smidgen, and he's really. He actually tells it exactly as he sees it.
Yeah, he does, man. And it was really intriguing. Listen to him, man. You know, because it's very.
I like him very much.
Yeah,
yes.
It's very seldom, folks, that you hear a Fed governor fighting for the normal person on the street.
That's right.
Yeah.
So what I was looking at is that Cintas is really. Look at this fantastic chart. It's moved with the market all the way from the bottom.
Yeah.
And it's held that 9-period moving, that black line, that 9-period moving average, just incredible. It's just now showing a little bit of a turn down. So it says to me that the pullback that we just had, and it didn't rebound. You know, most of the stocks that do this, they have this sharp move up, and then they pull back, but then they go back and retest. This didn't have a retest. And so that's number one. Number two is, if you look at Marriott made a round number high just recently. But
okay.
You've been to hotels recently. I've been to hotels.
Sure.
You've flown. I've flown. The airfares are out of sight.
They are. They're a ripoff. Yeah.
And the hotel prices are unbelievable. However, if you look at Marriott, one of the very best well-run hotels, look, it's triple topping here. It just can't get out of its own way. Made that round number high at 85. The monthly chart says that if it pulls back, it's at 80. It's at 80 right now. It was 85. If it pulls back to 78, that would be another suggestion to me that we are in the middle of a slowdown. And the airline index, with oil at this level, they should actually have gone to another series of highs and since the beginning of, what was that? I think it was January. The end of January, beginning of February, at 108.16, the XAL index has just gone sideways. So I'm just trying to put it together, and I think that there's some kind of a slowdown, and we'll, of course, only find out about it much later.
Yeah.
In fact, when they announce that there is a mini recession, whatever they call it, that's usually when the market just starts to move higher.
Yeah, but it's actually it's like a four-man committee or something, and we're deep into it by the time that happens.
So that's my thinking. And not only that, if you look at General Motors and Ford, and if you're on the road now, you're seeing more American-made cars, even though Toyota and others make here. I'm talking about American-named cars like General Motors and Ford, seeing more of them than ever, and they are really beginning to look good, and the quality is improving, but yet they haven't broken to new recovery highs. So I'm just saying that I think there's a bit of a slowdown that we're looking at.
Yeah. Listen, Basil, thank you so much. You have a great night, safe night. Of course, we look forward to the program tomorrow.
Thank you, Tom. Have a great
Thanks, man. Okay, bye-bye. Dow is down 178. Nasdaq's up 42. S&Ps are off 13. What is going to get interesting, folks, is this, is that in the context, okay, I mean, the way that I'm looking at things right now, I don't see a recession. I don't, what I do see, there's no doubt, if in fact these rates, if they do push these rates, that'd put a cramper on a lot of things. What I do see, too, though, is this, is that when you look at the aspect of our economy in general, what you do have is that there are definitely a lot of folks that are making plenty of bread. If we talk unemployment and employment, there are plenty of folks making a lot of bread that is not registering with the IRS. Let's put it that way. And then there's plenty of bread that is registering with the IRS, that the aspect of small businesses that we didn't have even 5 years ago. And that would be inside Uber, that would be inside HomeAway, that would be inside these peer-to-peer type of situations that are out there. That's a decent deal. And that in itself is actually, on many fronts, that's more money than they would be making if, in fact, they were just in a formal 9-to-5 type of job. You know, so the economy, you know, is changing. The economy is still large, and what you do have, though, is that the expansion that continues in the real estate market, that expansion inside the construction market is pretty strong. So what's going to get interesting, is it just a fact that we get a huge pullback and it's the high asset class that gets whacked and not the economy in general? Because what has always been intriguing to me is this, is that for some reason, if the market is up at highs and the market just continues to go, it's like everything is cool. It's like, that blows my mind, because I know plenty of people that don't own stocks. Now, what has changed over the years is that there are other people that, you know, between IRAs and pension funds and all that they have a passive investment in stocks. We'll see where it shakes out. You know, the bottom line is that, you know, the aspect of them raising rates versus not raising rates, that's going to be a big deal. And that's why we're going to stay all over these bonds and keep our eye on these bonds, because the bonds themselves, the bonds are going to release a huge amount of information to us. And I'm talking in the next 3 or 4 days, 5 days, because they're right at the downdraft that we had in February. And the bullish part, of course, is that you get an expansion of volume, you go to the highs, guess what? Doesn't matter what the Fed wants to do. They go to highs, those rates are coming down. We test that area, one or the other is going to happen. We're going to test it. You test it with lighter volume and you give it up, then get out of the way, man. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is down 164. Nasdaq's off 38. S&Ps are off 12. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 200, NASDAQ off 46, S&P's down 16, gold contract down $1.60, trading at $1,183 an ounce. Silver down 4 cents at $16.63 an ounce. Platinum up 21 bucks at $1,142 an ounce. Light sweet crude down $1.15, trading out of $47.52 a barrel. Bonds, we had the 10-year up 10 ticks. 128.29, 30-year up 14 ticks at 163.29, and King Dollar up 324 ticks at 98.60. The euro is back 80 at 107, and the yen was down 12 at 119.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, check this out, folks. This is going to be pretty intense, what we are looking at here. And this is what it is. The market, you talk about a little nasty close out here. You not only had a nasty close, the S&Ps themselves. So if we take a look at the S&Ps, how they sold this baby off, this is what you have. Your future inside the S&P at, let's see, at all of 3 o'clock, we're at 2071. It gets down to 2056. That's a fast expansion down. But that's not the big deal, folks. What you have is this. If I put the SPY up, what you're going to see is this. Now, and realistically, what should be happening in window dressing is that it gets some juice, gets the juice, basically can stay flat, bounce around, certainly not blow out to the downside. Now, we didn't blow out to the downside percentage-wise. What we did, though, is that they unloaded in the NYSE. We did 932 million shares versus 676 on the move up yesterday versus, and this is the kicker, if you want to see just what you're throwing out here. Even last week when we were down at those lows, it was only throwing out on the 26th, it was throwing out 828 million. So, what does that set up? Guess what? That sets up that this is going to be a nasty coming into this weekend. You know, yeah, I mean, this is setting up an ABC structure down. That volume that came out of that market at the close is amazing. Because picture something. Your swing point here is 204.12. We did 828 million there. Bottom line, this looks like a small ABC structure down. This thing, you know, bottom line, I don't think this thing's going to test. This baby is started, and if that's the case, that's going to show just how weak this market is. Because if you can't handle a window dressing, and in the bottom line is that when we're talking about a window dressing, we're talking about it's not even the first of the month yet. Okay, so the last 2 days of the month on inside window dressing, what they like to do is this, is that money managers in general will basically hold up their positions. I mean, you own, let's say, 1 million shares of Microsoft, you stop buying a little more Microsoft, hold that up. You'll hold everything up. That's kind of what the window dressing is there the last couple days. The beginning of the month is new IRA money that just comes in. It's not basically people saying, I want to buy. It's all the fund money that's coming in, that's getting taken out of paychecks coming in. The way this market is setting up right now, it's to say we got an ABC structure on the way down. We're going to go after now the lows that were generated out here last December. That's on the NASDAQ, on the Index 100, we're at 105.60. You know, we did 26 million. Bottom line, that B point is 47 million. It's going to go after it. This is going to be nasty going right into the long weekend. You know, because we are closed on Friday, you know, and all the markets said that they're jittery right now. We got to take a look at the gold contract. What do we have with gold? And this is going to be the big toss-up out there. It looks to me that gold, we pull back. We do have lighter volume. The real key is going to be, will it get a sign of strength before we're going into the weekend? I suspect, yes, the metal market is going to do that. Why? Because if you do actually go over to the dollar index, what the dollar has done is this. And man, this is so deviant, it's unbelievable, because trying to figure this out fundamentally, good luck. I mean, because it's like, if the rates are going up, the dollar should be going up. But guess what? The dollar can't hold the downdraft from from March 18th. We did 45,000 contracts out here today. The 45,000 contracts are going into 102,000 contracts. We got to a high price of 99. It didn't give up a lot. We're at 98.63. But the way that's set up is that if the high volume spike from the 18th wants to go after, very well could be a very large ABC structure on the way down. Inside the NDX 100, we go back to the Qs for a second and see what was moving the Qs up or down. In this case, we went down. And percentage-wise, what we did out here today, folks, is this. The Dow was off 1%, NASDAQ was off 0.9, and the S&P was off 7.73. So you can see it's not large numbers. What is surprising, bottom line, is the amount of volume that came out of the NYSE. That is a monster, because when I started the program at 3 o'clock Eastern Standard Time, we were only at 450. So someone laid into this market 500 million shares in the last hour. What was the leader inside the NDX 100 today was Charter Communications. That's taken over Bright House. That was up 972. Micron Tech was up 45. We had Express Scripts up 136, and Liberty Venture was up 64. Now, taken away from it on the way down, good old biotechs. You had Celgene down 474. Alexa Pharmaceutical was off 696. Kraft was down 340, and ADI was off 181. If we go into the Dow Industrials and we take a look at the Dow with the strength versus the weakness, the only strength inside the Dow, both of them at dead cat bounces, pretty intense. Coca-Cola, that was up 4 pennies, and you had American Express up 33 cents. The heat on the way down inside the Dow is United Healthcare was down 271. Chevron was off 192. Boeing was off 262. Caterpillar was off 134. So you're talking big numbers out here on the way down. If we go take a look at the diamonds, so we'll take a look at the diamonds and say, okay, talk to me, where are we going here? So the diamonds, of course, are the ETF structure for the Dow Industrials. With the diamonds, yesterday you bounced on 5.3 million. Today we backed down with 4.6. And at the swing point, the lowest swing point from the 26th, last Thursday, was 175.46 is your B point, and the volume characteristic down there is 6.6 million. It's going to go after it. The real key is going to be, do you have the juice to blow that out? And the next stop down would be that 170 area. The silver market. Silver is much stronger than gold right now, and this is going to be, we'll see how this market shakes out the next few days. Going into this long weekend is going to be a whole different ball game, folks. That's the bottom line. The reason being is that, okay, so last weekend, and Dave and I were talking about this on our show Friday afternoon, okay? So there was enough, basically, volatility across the world that last weekend, you know, I was looking at it and saying to myself, no one's going to go home short gold. Bottom line is that, yes, they sold it off. So it's going to be like, okay, man, you're going to sell gold off this weekend, too, in a 3-day weekend? We'll find out. My take, you know, is that, well, at this point, it's a heads up. Gold and silver pull back with lighter volume. The equities have pulled back with lighter volume. The equities thus far haven't rejected price, and that's what you're going to need inside that market. So we'll see where that whole thing does shake out. We go take a look at the high volume stocks out here today. This is what you had inside the high volume stocks. We had Bank of America down 13 cents. Apple was off $1.94. You had Microsoft down 30. Cisco was off 12. We had Ford Motor down 2. Not a lot of damage. What you did have, where the damage comes in, has to do with Big Blue. That was down 217. You got Boeing down 262. Disney was off 121. United Technologies 163. Decent numbers. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is down 200. NASDAQ 46. S&P's off 16. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 200. You had the Nasdaq off 46. S&P's off 14. And volume, folks, came out of that market fast and furious coming into that close. We did 966 million on the NYSE. That's versus 666 going up yesterday on the Nasdaq. 1.8 billion. Versus 1.7 on the way up. So bottom line is that when you're looking at this market, you can expect that we're going to go after that swing point now, that lowest swing point from last Thursday. And the way the volume came out right now, it's going to be very easy to blow that baby away. We'll go through some sectors right now. Now, if we go over to the IYR, inside the IYR, folks, this is the iShares Real Estate Commercial Index, okay? So inside of this index, what you have is that you have the large commercial real estate operators. You have Simons, you have Venero, you have, let's see, Boston Properties. Bottom line is that the way this is set up right now, this is also set up for an ABC structure on the way down. Now, it's going to be so cool as this. You're going to be able to get a lot of clues in this marketplace about what we have, meaning, are you going to break lower and do you have the volume? It's going to be sector by sector. So what tends to happen is that one sector goes before another sector. Looking at this IYR, this is going to go after the low. The real key is going to be, does it break it? Now, the A point on the IYR is 82.41. The B is 78. So you get like $4. The C would be high of today. So that would be saying you can make a run to $76. Now, what's pretty cool about the IYR is this. When you take a look at it, at $76, which was the low that was generated on March 6th, you get a high volume low. So it's always cool when you have an ABC structure, and that ABC structure equals another price point that looks like it may go to. And when you're doing these structures, folks, what to do is do the math behind the ABC structure first, and then find out where it's going. Because it's always intriguing that it's like, man, how the heck does that happen? And you'll learn a lot more if, in fact, you do it that way, because then you'll get more confidence in the structure itself, and then you kind of figure out that, okay, A to B equals C to D. You pass the B point, you do it with volume, bottom line, and that's where it wants to go. So what are you going to be looking for here? What you'd be looking for in the IYR is this. You'd be looking for, as you move into first the B point, that B point that we're talking about is the low of March 26th. You get volume out of that B point, and the volume characteristic will be more than 10 million shares. You get that going, well, guess what? How you come into the low of March 6th is going to be a huge clue. The reason being is that when you pull this back a bit and we put this up, what you're going to see inside the IYR is this. You're going to see that this is what's really dangerous inside this whole setup. So watch this. The market itself has gone up and over the 2007 levels, like it's sliced right through them. The IYR, however, different ballgame. You know, the IYR, the high in the IYR is 83.54. The 83.54 lines up to the downdraft of 2008. You get back inside 76.21, which is only 3 points from where we are. What that would set up is that would set up nothing. Well, no, that would set up a 61. That would set up that you can run to 61. You run to 61, you know, that would be just a normal pullback, by the way. The thing that's amazing is that because these runs have been so extraordinary, that a normal pullback in the IYR or the market in general would be really problematic because of the fact that the run has been so extensive to the top side. Now, let's go over to the SPY. So many people like trading the SPY. So what do we have with the SPY? What you have with the SPY is this. The setup with the SPY would go like this, your ABC structure. It's only a small one, okay? But your A point up there is 211. Your B point is down there at 204. Your C is running at 208.61. So you get, what, 211, 204, so we get, what, $7. $7 would get you into basically the 201 level, and it's the same setup. See, the 201 level, the 202 level is the bottom of the consolidation. That would have been down 3 separate times from December 15th. What you also have there, of course, is you have volume on every one of those spikes. And the wild card, and not that it's wild, is the October 15th swing low. That October 15th swing low is screaming out there, and it's going to be really wild when it does get hit because it's down so far, folks. It's down at 180. The high is 187. The low is 181. You know, that little baby wants to get hit, and depending on how it gets hit, you get hit with volume, and you're talking a whole different ball game, you know, because your next stop after that would end up being 173 and then down at 165. And in that aspect, so check this out. This is what's so bizarre about this. And that whole aspect, because we've run so high, so fast, if I just take the most conservative retracement, I'm only going to take the retracement from 2011, not from the bottom. If I just take the retracement from 2011, a 0.382 is 172. A 5.0 is 160. That's insane. And I'm not taking the retracement from the bottom. So what I did is I took the retracement from 2011 because from 2011 to basically about 4 months ago, that was a straight line move. You know, since then, since December, we have consolidated. You get over the highs, you had lighter volume, you close back under the highs. And the larger issue, no doubt, if I bring this up here, what you're going to see, this is about as clean as you get too, by the way. I'm going to show you something here. And we can get our man, Mr. Bud Rolfs, our channel king. If you see this, this is so insane how this sets up. It's a classic, technically. And we'll see if, in fact, this is how it shakes out. But when you put the cash S&P up, or you can put the SPY up, it's not going to matter, and you actually set up your trend lines, what you're going to see is that once the initial break happened in October, we broke the whole trend that started from 1343 in the S&P cash. It got above it, failed, well, it got below it with conviction. The week of October 17th. You get above it with no conviction. You get below it again the week of December 19th with conviction, and then guess what? Then it can't hold it. That is a classic, folks, that says you're going to go back. First off, we know we have the high volume swing low at 1820. You're at 2067. That's only the beginning, though, because the classic technical sense, when you break something like this, is you go back to the trend line. That'll be a total mind blower. But bottom line, thus far, that channel has held in an incredible way. And if you do have the out of time in the trade, you know that when you're looking at the channels, the way you can set up the other side of the channel, I mean, you go into it, every time we went into the channel to try to bust it, zero volume. Every time that you broke downtown, guess what? You were breaking with conviction. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down 200. NASDAQ off 46. S&P's off 14. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Let's get over and we'll take a look at the energy sector. We're going to start out inside that energy sector with ExxonMobil. Why Exxon? Because that is the largest weighting structure inside that sector, folks. And bottom line is that we'll see how this comes after the bottom again. The Exxon closed today flat, down 63 cents, but really a flat market, sideways market. The low that is out there is 84.46. You know, if in fact you get volume out of this, that'll be a monster because the ABC structure on the way down, 93 is your A point out here. That A point was established on the 13th of February. Your B point is 83. So you got $10. Your C is 86, which would get you a to B, C to D of 76. And bottom line is that what has happened already is that Exxon failed at its highs, got back inside the lower range. It stayed outside the range. Like when it broken out of the 2007 highs, folks, it stayed there for approximately 4 months. It broke back inside it. You're back inside it, you know, bottom line, it's going to move to lower price. Now, for Exxon, and this is going to be really cool to watch out how this whole thing shakes out, but this can give you a good roadmap going forward. So Exxon's at 85. The ABC structure that it's doing right now says that Exxon can go to 76. So if it breaks the B point with volume, 76 is the game, right? This is where the problem comes in. As ExxonMobil, if it moves inside 81, and let's say we did move to 76, that'd be a huge problem. The reason being is that that is your high volume support area. You get into that bar too much, guess what? You can go right down to the end of that bar, and as I say many times, you can't bust them up. What are you going to do? You're going to bust them down. What has happened with Exxon is that you have had an expansion of volume as you have been moving to lower price inside the context of what we had on the way up. We go take a look at the financials. So we go to the XLF. We take a look at those financials. What we do have with the financials is this. The financials thus far came off the high with volume, didn't make a high, and the high that was generated inside the financials, folks, goes all the way back to December 8th of last year. December 8th was the high. On that high, we had 42 million shares. It went back, it went down, and tested that on December 29th. With 17 million, so your correlation there is that the first time up you had 42 million, the second time you had 17 million, failed. And in both cases, what you did is this, and this is what stopped the XLF this time. The first high that was generated out here on December 8th, we came down with volume, big volume. You went back topside, tested it out, came down with big volume again. That area, meaning the area for like $24 to $25 is brutal. What do? We came back up to that area, and then we came back up to that area with 47 million. Couldn't even get into the price, and that volume characteristic was the same, but it was too tired. As it get up there, it was just too tired. Then what do? We come off that with juice last week. You bounced with some fairly juice yesterday. So we'll see how it's going to attack the 2378 area. But right now, that 2378 area does want to get tested. So we'll see how that does shake out. If we take a look at the Berkshire Hathaway, that's trading out at 144.32. That also is off its highs of 152. And I can tell you the way that good old Warren Buffett was everywhere out here today. Buffett was saying he was pumping this market so many different ways he couldn't see straight. Billionaire investor Warren Buffett said the Eurozone could withstand Greece's departure from the currency union. If it turns out that the Greeks leave, that may not be a bad thing for the Euro, Buffett told CNBC in an interview Tuesday. If everybody learns that the rules mean something, and if they come to general agreement about fiscal policy among members or something of that sort, that they mean business, that could be a good thing. Folks, let me tell you something. Well, that was the first. He just came out with that. He was coming out with that. He doesn't care about Janet Yellen raising rates. He's going to buy more car dealerships. The bottom line, He's out there pumping in a huge way. If the Greeks go off the euro, you are going to see a very fast-moving currency market and high volatility everywhere. And it's not because of the Greeks coming off of it. They should come off it. The bottom line is they're not going to pay back the debt. The debt's just going to get rolled. It's not going to happen. They got a great country. They got tourism. They're not going to work. They're not going to pay the taxes. This has been going on forever, by the way. Okay, this is not something new. Okay, you know, if you read any stories about it, you know, and guess what? People are going to go to Greece. It's a no-brainer. Okay, bottom line is that what it has to do with the banks that have lent them the money. That's what it has to do with. It has to do with the contagion, with the banks lending them money, and then, as we know, that when the tide goes out, who doesn't have the bathing suit on? And that's the number. That's the first part. Second part would be a larger part, and the second part would be Spain, Portugal, you know, Italy. Do they really want to pay up if they don't have to? I'd say no. You know why not? Because bottom line is, if one country doesn't pay, why should another country? That's how that would shake out. So, will it happen? You know, we'll find out. I don't think it will happen. The reason I don't think it will happen is that Germany themselves, no matter how many times the push comes to shove, they know that if in fact it does happen, it's going to be their banks that take the hit. Their banks are on the they're on the hook for billions of dollars, folks, okay? And there's not billions of people in Greece. It's hard for me to even understand, well, it's really not, as to how much money they got to lend. Because what has happened on every one of these loans, by the way, so picture, we'll break this down just on a very easy, common sense type of way. Picture something. Picture that you owe $1 million, right? We'll start with Greece owing $1 million. They owed $1 million. They couldn't pay the $1 million. They didn't pay the interest. The banks rolled it up again. Okay, now you owe $110 million. They rolled it up again. Now you owe $120 million. Rolled it up again. Now you owe $140 million. Well, that's what you have that's been happening in Greece, and it's been happening for, oh my God, you know, you're talking almost 20 years. Okay, you're talking not monster numbers, probably longer than that. Bottom line, so the correlation has been rolled. What they want to do now is that they want to roll it forward more because they don't want to write it down. The write-down aspect, this is what's so wild about accounting, folks. The write-down aspect is crucial, understanding what these companies are trading for, meaning the banks. When the banks come out with their numbers, right, and this is absolutely legal, right now what has happened is that the regulation inside the European Union is that the banks can value that debt at full value. Well, it's not going to be paid. So if they had to write down that value, guess what? That would take a hit. You've heard a million announcements about Basel and about the amount of cash that has to be held inside banks. Well, guess what? That skews all of that ASAP. So bottom line, you know, I don't see it's going to happen. Push comes to shove, they're going to give them more money. That's what that comes down to. If we go over and we take a look at Microsoft, it looks to me like Microsoft, you know, Microsoft's getting hit, and more than likely, it's going to be actually Google that's going to hit them. I've been watching Microsoft, like, what's wrong with Microsoft? Microsoft's on a beautiful tear. Microsoft is going to go after a B point of an ABC structure down tomorrow. That's a monster. You know, it already came off the high of 50. You're at 40. It's going to go after that swing point of 40.35, and it closed right at it. And so what comes out after the close out here today? That Google is coming out with a $149. Listen to this. Google's coming out with a $149 laptop. And the new Chromebook, the least expensive ones, feature all-day battery life. They're available online for pre-order. $149. And with those Chromebooks, by the way, okay, Chromebooks have made computers faster, simpler, and more secure while eliminating everyday hassles for waiting for your computer to boot up, having to constantly change it, remembering to install software updates. The bottom line is that this works right off the cloud. So Google is pushing low-end laptops as it looks for ways to draw people to its Chrome operating system from Microsoft Windows. The Google laptops, which don't have hard drives, rely on the internet for typical tools such as email, document storage, word processing, and spreadsheet creation. Bottom line, folks, is that, think about it, $149, you're going to have a computer, the world's going to be wired, period. And that is what is basically hitting Microsoft. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And, folks, if you'd like to test drive my daily newsletter, Market Insights, the way you do it, come over to our website at TFNN, go to newsletters, go to trading newsletters, Market Insights. You can test drive 2 weeks absolutely free. If you'd like to test drive the Gold Report, go to newsletters, investment newsletters. You can test drive the Gold Report for 30 days. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. DYAX. This is a biopharma company that focused on the development, commercialization of antibodies, small proteins. This closed, folks, at $16.75. It is trading right now at $23.41. And these biotechs are always a trip. Either they get to make it or break it on news. What did come across here is that they're, let's see, they say the HAE attack rate was 0 in a group that got 300 milligrams of DX2930. And the bottom line is that I'm not even sure what this is used for, but they got action. This is up $4 after the close. If we do go over to that biotech index, let me go to BIIB, which is Biogen. And the reason we're going to go to Biogen is this. Biogen is what topped off the biotech index at this particular point. Biogen had come up with some good numbers on the 20th. It spiked higher on the 19th. This had stopped at 439. It closed at 439. On the 20th, folks, it opened at 480. Now this is so dangerous, it's sick. So in 6 trading days, it just went from 480 to 422. That's the first part. Second part's going to be more dangerous, and this is going to play out tomorrow. So we closed at 422.22. The B point on this is 420.41. Your volume there is 3.3 million. We did 1.8 today. If this takes it out with volume, you're going to be, well, let's see. The structure itself is 80 to, 20. It's 60 points. So your A to B is 60 points. Your C point is at 437, which is going to give you a 377 area. And what you do have, oh man, this is sick. It's at 345, 354 rather. 354, you have a gap. There's another gap down below that at 310. So if you happen to own the stock, folks, get your stops in, because when a equity turns, what you always want to be cognizant of is, number one, where are the gaps? Because gaps get filled. That's the bottom line. The only time a gap doesn't get filled, particularly large gaps, is when an equity takes over another equity. But when you have a chance that you see an equity that runs, starts pulling back, it pulls back with volume, which this has done, you want to be cognizant of that, number one, and you want to basically make sure that you get those stops in, because there's no reason to take that type of heat. Because when we're talking the biotechs in general, the biotechs in general could just have a natural pullback in a market that wants to go higher. And because of the expansion on the way up, that natural pullback will be dramatic as to number of points. The percentage will be the same. And this is what happens in markets that have gone up so quick. People can really get hurt because they've gone up so quick. When they come down, they're vicious. like a 0.382 retracement inside Biogen. Now, Biogen's at 422. A 0.382 retracement is $314. That 314, that's a normal retracement in a bull market move. Never mind if it was a change of trend. A 50% retracement, which is the normal type of retracement, you're talking about longer term retracements, but we're talking about, this is a market that hasn't stopped for 5 years. From 2010 to basically last week, this market went up, meaning biotechs. A 50% retracement is 263. That's pretty intense, folks. And you want to wrap your head around that because it's just not Biogen, okay? If you go to Amgen, you can see that Amgen never made it to highs like Biogen did. What Amgen did is this. Amgen had been in a consolidation, was in that consolidation going all the way back to October, didn't break out of the consolidation, and bottom line is having a hard time staying at this higher price. So when you take a look at the aspect of where Amgen is, because Amgen is the second largest weighting inside the biotechs. I believe it is. Let me just see something. Yeah. Biogen is 8.1%. Amgen is 8.01. So Amgen's the second largest weighting. The high on Amgen goes all the way back to December 8th. That was 173. You're dealing at 159. Now, the thing that's pretty wild is that Amgen doesn't look set up as bad that will take such a hit as Biogen did, even though Biogen went a lot faster, it went further, but on the downside, it looks like just the opposite, that it does have more support at this 150 area. And markets in general, what you're looking at is this, and this is basically definitely a change from what I was looking at this morning. And what it is that you're in window dressing. The way the volume came out of this market at the close, we did over 900 million on the NYSE, and that's more than we did at the B point. This is going to go after the B point. The B point being 204.12 on the S&Ps. You break that 204.12, you break it with volume, you're going to be down into the consolidation from December 17th. That's on your SPYs, and the SPYs had been looking a lot better than the Qs. The Qs looked like they wanted to go there anyway because the Qs, even yesterday, didn't have the juice to get into the downdraft from March 25th. So the Qs want to go after it. The SPYs want to go after it. The real estate index, the IYR, wants to go after it. The IYT is an ABC structure on the way down. That's the transportation. They have been getting smoked because of the rails and because of the price of oil. Let's go over to oil. They were whacking oil out here again today. If you take a look at oil, what we have with oil is getting close to the bottom of the consolidation that it has been in. And I suspect, oil's going to try to test this 47.48. It's not that much lower than it is. It's going to need more juice to break out that low, but it looks like it wants to test it. And, of course, the wild card in all of this is going to be where is the dollar going? And bonds are the number. Like, a bond's going to expand over the swing point of last week, and you're going to have volume as you expand over that swing point. What the bond market is doing right now is it's building cause to go into it, to make it and/or break it. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.